Are there any alternative coins, any altcoins that you invest in or you're bullish on when you look at, I mean, I don't know, look at any of these that are out there right now? You're looking at Cardano or Ethereum. Are you just
No,
strictly in the...
they're all ventures, right? I mean, Bitcoin's the dominant crypto asset. Ethereum is the dominant crypto application. You can divide the entire universe into some segments, and Ethereum is competing with Binance Smart Chain and Solana. That's very competitive. They're very complicated. They're very centralized, much more centralized than Bitcoin. They have to be centralized because they need to run on proof of stake networks because they need the speed.
Mm-hmm.
So proof of stake itself is orders of magnitude more centralized than proof of work because you don't have these sprawling networks of miners with their ASICs everywhere on Earth sucking up energy to keep any one person from getting control of the network. So Bitcoin is like the dominant winner of sound money. These other things, they're just very risky. They could crash. One could win. One could lose. Ethereum doesn't even run on proof of stake yet. So, basically you don't know when they turn on proof of stake, the entire thing's not going to go in some bizarre way, right? What'll happen? You don't know.
Interesting.
So,
yeah.
So let me say it a different way. If you're a crypto investor and you run a venture capital fund and you want to make investments with high risk, high reward, and you want to study it and you want to take the risk, then you can trade in those things. But in my opinion, they're 100 times less lucrative over time and they're 100 times more risky. So it seems like it's a 10,000 to 1 difference. I wouldn't do it, but other people do it. And it's probably good for the industry because it markets the industry, right?
Right.
And they're venture capitalists. They have to do it. Like, I'm not going to, I'm not going to tell them not to do it. It's like, this is one risk tranche. This is a different risk tranche. If you're super smart and if you get, if you guess, will it be Binance Smart Chain or Ethereum, or maybe it's both, maybe you trade. But, when you get into that, you get this question of, well, when are you going to take money off the top? And when are you going to diversify? And are you going to be in it forever? I tend to think I would prefer to invest in things I can hold for a decade, if not 100 years. But there are plenty of people whose job is they're venture capitalists. And the venture capitalists are betting on things where they think there's a 90% probability it'll fail. But they think that they'll get 100x return if it hits. So it's a different thing, right? So I would say it depends on your portfolio of money. Like are you investing someone else's money, your own money? Are you a VC? Are you a private equity investor? Are you a saver? Converts their money into a strong currency. An investor manages a portfolio of risk. I buy some Apple, some Facebook, some Google. They've all got risk. A trader manages a portfolio of risk derivatives. I'm guessing, I've got options in Apple, and I think that Apple's going to beat on the next quarterly release.
Right.
It's not even a portfolio of risk over a decade. It's a portfolio of risk over 90 days. Or it's the second derivative of risk. I'm like shorting Apple options against Google options because I think the spread is coming in, and it's something you can do.
Right.
It's just a different thing, right? I'm arbitraging people's risk derivatives, and fine, knock yourself out if you're bored, if it's your profession. But another analogy is like a decade ago, if you bought Apple and Amazon and just held them, you probably would have made a lot of money. You would have made 10 to 20 extra money. Now, if I could go back 20 years or 10 years, would I give people advice about when to buy and sell Apple in the year 2012? Or how to trade Apple options against Amazon? Should you buy or sell Amazon in the year 2014? Can you remember off the top of your head whether you should have bought or sold Amazon in 2015 so you could buy it back cheaper in 2016, or did it? Yeah. By the way, if you had, Jeff Bezos was at war with Donald Trump before the election. And so what's the worst thing that could happen to Amazon? You would think that it would be Donald Trump getting elected, right?
Right.
But, if you had actually sold Amazon once you know that Donald Trump was getting elected, it would have been the most catastrophic decision of your life, because Amazon stock doubled in the first 12 months after Donald Trump was elected. You understand what I'm saying?
Right.
It's like you're a trader and you know the future, you'll probably still lose money. Because the best thing that ever happened to Jeff Bezos, Jeff Bezos, his greatest enemy got elected president. Jeff Bezos' stock went from like $800 to $3,200.
Mm-hmm.
Okay, Jeff Bezos got divorced. Is that bad? It should have been bad for Amazon. Didn't seem to be bad. It was good for them. You know, like all sorts of, it's hard to predict what might be good or what might be bad. You go back a decade, and if I told you, I think Facebook, Google, Apple, Amazon are good companies, what's your best strategy?
I have no idea.
It's simple. Buy it and hold it.
Oh yeah, just buy and hold it, I guess. Yeah.
Buy it.
Yeah, because you could have these ups. Is Facebook going to be affected by Amazon's privacy and their new iOS update 14.5? How is that going to play out?
Your best strategy would be to buy it and then mortgage your house and buy some more. Like, don't trade it on margin. Where
Right.
If you get a 20% drawdown, you get liquidated. But mortgage your house, mortgage your car, mortgage your company, buy Amazon, Apple, Facebook, Google, and wait. If you can't raise debt, then take all your money in your piggy bank and buy and wait. And all this, and by the way, if you basically just bought them and turned off the television and
Right.
didn't read a newspaper for a decade, you'd be better off.
Yeah, and don't pick up the Washington Post, which in the interim was purchased by Amazon.
Yeah, because everything that you read is just calculated to give you anxiety and hysteria and get you to trade or hedge your position.
Right. I want to ask you about Janet Yellen. Yesterday made comments that sent the markets into a nosedive. NASDAQ dropped pretty big yesterday on her discussion of having to possibly increase interest rates here to help stabilize things. Then she walked it back a short time later. All of this, of course, around the idea of inflation and Jerome Powell saying we're going to let this run hot for a while. So how does Bitcoin, how does cryptocurrency fit into this inflationary discussion right now?
I think Bitcoin is the best monetary inflation hedge in the world. If you know that that the central banks are going to expand the currency supply, then the most important thing you can do is construct a portfolio of high quality assets that are scarce, that are going to appreciate in price at a faster rate than the currency supply expands. And so that means Bitcoin, because it's ultimately scarce and fungible. You can transfer it anywhere in the world, and people with money are always going to want it. And after that, perhaps clearly the home that you want to live in the rest of your life, trophy real estate that has tangible value to you, perhaps trophy art, a Mona Lisa, something which is extremely scarce, a Van Gogh painting. If the currency supply increases by a factor of 10 and you have a very scarce piece of art, presumably the price of the artwork is going to go up. The best thing going, of course, would be scarce assets that you can finance. So if you have a home that you love and you can get a 2.5% mortgage for the next 10 to 30 years against it, then it makes sense to maximize the mortgage, hold the property. When the money supply is expanded by a factor of 10, if your home is in a place where no one else wants to live, it won't go up by a factor of 10 because it won't be scarce. But if you've got 3 acres in the Hamptons on the beach or in Palm Beach, right? If you live in a truly desirable community, the price of the home is going to go up. And as the price goes up, your loan's going to be fixed. You'll be able to refinance the home. You've got leveraged equity, if you will, or leveraged property. I think Bitcoin fits into that. Bitcoin is appreciating at the fastest rate, faster than the NASDAQ or the S&P or luxury real estate or average real estate around the country, because it's the most scarce, most desirable asset. So that's how it fits in.
How do you see, what is the exit strategy then for Bitcoin for you? With
There
your
is no exit strategy.
No, and I mean, do you think that we'll see some sort of a Fed vehicle like the 1031 exchange that would allow you a move out of something like this into something else, a like-in-kind asset? I mean,
see, the point is, why would you exit from the best investment asset in the world if it keeps getting better?